Hi, good morning, everyone. Welcome to the virtual edition of our Digital Banking Asia Conference 2022. So, this is going to be a 2 day virtual conference. We still have eight tracks for day one and day two tomorrow. These tracks will be filled with exciting speakers and topics for the Southeast Asia banking industry. Before we kick things off with the first speaker today, we'd like to thank our sponsors for making this event possible. Our diamond sponsors, Neo4j and ServiceNow, our gold plus sponsors, Genusto, DocuSign, Oradian, and Jumio. Our gold sponsors, Elastic, NEC, and Adobe. Our silver plus sponsor, Insider, our Exhibitor Plus sponsor, Questronics and Precisely, our exhibitor sponsor, Software Group, our presentation sponsors, KPMG and Episode 6, our attending specialists, Thought Machine and Euronet Worldwide, and last but not least, our knowledge sponsors, Equinix. So up first is our Asia Leaders Talk, and to start things off, we have a presentation by the Secretary of Finance of the Philippines, Mr. Benjamin Diokno.
To our friends and colleagues from the banking industry, distinguished guests, ladies and gentlemen, good morning. It is my honor and pleasure to be your keynote speaker today. The Digital Banking Asia Conference is a great opportunity to share innovative solutions among banking giants and fintech disruptors from around the world. This is also an avenue to expand collaboration towards a more globally competitive digital economy. Technology has a well-defined role in the world of finance. It facilitates a more inclusive and efficient financial system. Recognizing this, the Philippine government has long encouraged the rapid adoption of fintech. Even before the pandemic, we have put in place a liberal regulatory environment to enable fintech to flourish. The landmark Corporate Recovery and Tax Incentives for Enterprises law is seen to strengthen the culture of research, development, and innovation in the country. Under CREATE, we intend to pursue highly desirable investments that are consistent with the fourth industrial revolution. These activities will spur the development of new production techniques and business models to transform production systems. In turn, this will provide incentives to industries that will invest heavily in innovation and digitalization. Meanwhile, the recent amendments to the Retail Trade Liberalization Act, Public Service Act, and Foreign Investments Act widen the space for investments in enterprises employing cutting-edge technologies. We have also welcomed the entry of digital banks into the banking system and ensured the safe operation of these new industry players. In fact, the Bangko Sentral ng Pilipinas is developing a digital financial marketplace model that builds on the open finance framework. This model will set forth the criteria for the grant of authority to engage in digital marketplace operations and the related supervisory expectations. On the part of the Department of Finance, our revenue agencies have fully embraced digitalization. The Digital Transformation Program of the Bureau of Internal Revenue aims to transform the Bureau into a data-driven organization. This effort digitally empowers our revenue workers to deliver efficient tax administration and enhance the overall taxpayer experience. Meanwhile, the Bureau of Customs worked in close coordination with the United Nations Economic and Social Commission for Asia and the Pacific, or ESCAP, to establish a national action plan for cross border paperless trade. The Bureau of Customs also tapped the support of the World Bank to finance the Philippine Customs Modernization Program. This project focuses on shifting from a largely manual and paper based organization to a digitized one. By 2024, we expect to fully modernize the Bureau of Customs in accordance with international standards. Through the help of the private sector, we have also set up a number of e payment and e filing channels to improve tax collection and administration, curb corruption, and thereby improve the business environment in the country. These efforts will contribute significantly to our revenue collection, which we project to already exceed its pre pandemic level this year. The digital transformation of our financial systems will also allow us to promote greater financial inclusion and maximize opportunities in the digital economy. Meanwhile, we are in the process of completing the Philippine Identification System, or PhilSys. Through it, we will be able to facilitate seamless
Check.
financial transactions and more efficient distribution of social services. As envisioned in the Digital Payments Transformation Roadmap, we target to convert at least half of all retail transactions volume into digital form and onboard 70% of Filipino adults to the formal financial system by 2023. We continue to expand the reach of the Overseas Filipino Bank, the first ever branchless, digital only government bank dedicated to serve Filipinos abroad. Through the Overseas Filipino Bank, more innovative products will be developed to serve the specific needs of our countrymen. As you can see, the Philippine government is committed to making foundational investments in the digital economy. We will need the best technologies, ideas, and people to ensure that Filipinos have access to vast opportunities at their fingertips. I'm glad to see that we have a wealth of partners from the government, the private sector, and the international development community who stand ready to help us in this mission. Let us continue working together and explore even more possibilities in the digital banking space. Thank you.
All right. Thank you to Benjamin Jokno, our Secretary of Finance, for opening up our virtual conference today. So up next, we have a panel discussion on Explore the Asia's Bank Innovations in 2030. So in this panel, we have Dietmar Bomer, Chief Analytic Officer of Time. We have AJ Kushwaha, Director, Solutions Architecture of Elastic. We have Varawat Kirinirutana, Senior Vice President, Head of Digital Wealth Platform, Wealth Strategic Initiatives and Product Sales Strategy Chief, Wealth Banking Office at CM Commercial Bank. We have Brian Burt, Senior Business Development Director at NEC Asia Pacific, and our moderator, Mr. Alvin Dave Pusing, Director, Financial Services and Risk Consulting at PwC. All right, over to you, Alvin.
Thank you, Jed. Good morning, everyone. I'm so excited and thrilled to be moderating this session. Especially, we have our esteemed panelists who can give a lot of insights in our topic, Explore the Asia's Bank Innovations in 2030. It's always interesting to learn from the visionaries what their views are in terms of what we can see in the future, particularly in the context of bank innovations. And as I was preparing for this session, I'm looking at the predictions from before, earlier, predicting 2020 and 2030. And we see that there are a lot of changes and innovations that happened since those reports were written. But at the same time, given the pace of and dynamic landscape, particularly in digital banking, we expect more innovation and developments to happen even in the next few years. But given this very broad topic, would like to get the insights of our panelists, particularly in terms of bank innovation for 2030. And probably just to start, let's start it with bold predictions, if you'd like to call it. Probably I'll start with you, Ditmar. This is a question for everyone, but probably we'll start with you, Ditmar. So, what would be your digital prediction in terms of how a bank looks and feels in 2030?
So my VM prediction on this has actually changed quite a bit in the last week, and it's been sort of shaped by me playing with the Chat GPT bot from OpenAI that they've released. So
Oh,
I think the look and the feel of how banking will very much be integrated into your daily life. It will not be a separate action that you have to go and perform somewhere. It will be personalized. It will be part of your life. A lot of the things that you do on a day-to-day basis or monthly basis that's currently recurring, all of that will be automated for you. So I think it will be a very, very seamless digital experience that's very much part of your life, very much personalized to who you are and what you need from banking.
thanks, Titmar. I think before we have work-life integration, now we have work-life financial banking integration. So it will be integrated in our day-to-day life, and we might not notice it, but we're already doing banking transactions in whatever we do. Thank you for that, Titmar. How about you, Vera? What's your take for the banking look and feel in 2030?
Yes, in my view, for the service and products in 2030, it's gonna be fully digitized and also fully automated. So basically, bank with a lot of data that we start analyzing with adoptions on the AI, the artificial intelligence, and also all the machine learning. I think the bank can provide and predict what the customer gonna need before customer themselves know what they need. So basically, in terms of the product and service, it's gonna be very personalized, directly matched with the appetite or the preference of all those customers. And it's also in terms of the customer journey, start from end to end. For example, start from account opening until the customer make the transaction, which can be deposit, transfer money, and all payment. It's gonna be fully digitized, and also the look and feels on the digital application would be highly customized to match with the customer preference.
Thanks, Verawat. And key points that I take from your sharing would be the focus on customers or customer experience and digital processes and transactions, and the concept of hyper personalization. And anticipating the customer needs based on what we know, what we anticipate, and based on the information that we have from our customers. Thank you, Verawat. AJ, how about you? Your thoughts on this?
So, good morning, everyone. And it's quite interesting to actually see that, how thoughts are kind of like converging. But the way I think is that probably in 8 years' time, I think it is going to be primarily evolutionary change. The way the banks and the financial institutions, they bring their products and services to the customers. Until this point, I think the industry has revolved around products and services. But the kind of change I'm seeing is that there's a lot more inclination now to kind of like surround a customer and understand the customer from their life cycle perspective and figure out at what stage, at what milestone, what products are relevant to them. And as mentioned earlier, and the whole idea here is that how can we leverage data to kind of like predict and bring the products and services to the customers even before they realize the need for it. So the financial institutions in future probably would be always ready and kind of like a step ahead in terms of anticipating what the customer wants. I would also say that I think we will see a lot more focus on B2B financial services. And let's not forget digital currency. I'm sure there's a lot of positive and negative vibe around it at this stage, but I guess it is reaching a point where some regulatory intervention will start to happen soon, and probably there would be some indications of how it can come to the slightly towards the mainstream. And on the fun side, I'm a technologist, so I'm hoping that the general AI and the metaverse will evolve, and 8 years later, if I ever have to visit a bank, which probably not, but if I ever have to visit a bank, I would do that in the metaverse, wearing my VR goggles. So I'm looking forward to that day.
That will be interesting, right? Banking without going to the bank. Of course, we've seen it a lot
Absolutely.
happen, but the flavors of branchless banking, as well as using the metaverse and the augmented reality or virtual reality in terms of banking, that will be very interesting. And I agree in terms of the convergence. While before traditional banks would focus on products and services, now customer with data will be front and center on how things will be driven out of the bank. And I have a follow up question with on that, AJ, later on, specifically on data. But very good take. Last but definitely not the least, Brian, how about you?
Well, good morning, everyone, and to my friends in the Philippines, Malagay and Pasco. It's getting close to Christmas, so happy Merry Christmas to everyone. I have a slightly different view than my colleagues in that in order to look forward, I think I looked backwards first and saw what was happening over my shoulder. So we have made some great changes in the banking industry. No, there's no doubt about it. 15 years ago, it was a branch-centric type of banking and very linear in style. And now we're doing a lot of transactions on the internet, internet banking and mobile banking. But the take-up rate for the customers is very, very slow. I read an article that said something like 80% of people that use mobile banking just check their balance on their in their savings account. So I think the take-up rate is very slow. Also, I'm a big science fiction fan, so I look back on some of the writings of some of the most popular science fiction guys and their predictions about what the future would be like, and they got it all wrong. So they thought things were going to happen a lot faster than they did. My experience with banks is they're still resisting change. You don't see a lot of production and enterprise wide applications on the cloud, for instance. Although I'll talk about that later. But I think you'll see more of the same. I think you'll see an acceleration in digital acceptance. I think as the new generation has low tolerance for lag times and they flip from one application to the other if it doesn't come up very fast. I think you'll see an improvement in what Ajay said in artificial intelligence. Right now, we have those silly little bots that show up on your screen that don't work, and there's a lot of effort being put in place by some of my business partners to make sure that they're using real time artificial intelligence to make some key decisions around how things are moving forward. So I don't see real dramatic changes. No matter what Elon Musk says, I don't think we're going to have a chip in our head anytime soon. But I do believe if you see the movie Minority Report, I think we're pretty close to that kind of future where you walk into a retail store and they scan your iris and they know exactly what your buying patterns are. So and then how you're going to pay and all that kind of stuff. So that's my vision of what's going to happen in the next 8 years.
Thanks, Brian, and very interesting in terms of the specific insights. And agree that there will be there were changes and there is an accelerated change, but you will see that it's um, not consistent in terms of the pace. Of course, there will be advanced players, and then there would be some players who are trying to get a grasp also of these digital transformation and technologies and how they apply to their respective businesses. And um, interestingly, I will probably rewatch Minority Report and see how it applies, because it's been a while since I read watched that movie.
But
Yeah,
just one comment though, Alvin, is that I was really elated to hear the Secretary of Finance talk about the revamping of the border control going into the Philippines. That makes me very, very happy.
That's good. That's good. And I think that's at least we see several perspectives, and we have looked at different angles in terms of bank innovation. When we talk of innovation, it's not only technology centric or technology focused, but we have talked about customer experience, data, as well as the change management and the openness to change, and how change agents can work on these transformation. Um, I was just looking at the specific references, and to your point, these are things also that I have seen, particularly in terms of having the front end revolution, looking at establishing client relationships, as well as a scattered landscape, not only the banks doing financial transactions, but even non-bank players. So this introduces a lot of complexity, and at the same time, interest in terms of how things will move forward. Plus, of course, I think AJ, you were the one who mentioned about the rise of the central bank digital currencies, as well as how the regulators will tackle this. We have opened up the conversation on predictions for 2030, but maybe Brian, something that I have seen particularly from NEC would be the concept of society 5.0, and I think it weaves very perfectly in terms of our discussion. Maybe you can describe what society 5.0 is and how it influences the bank of the future.
Okay, so I'm not really sure that it will influence just financial
Mm-hmm,
institutions. So I
mm-hmm.
mean, it's aimed at the entire society.
Broad, yes.
Yeah. So, simply put, though, 5.0 is the fifth reiteration of the previous four societies, and you have to go back a long way. So you start talking. Society 1.0 was a hunting society. 2.0 was an agrarian society. You know, farmers. 3.0 was when the Industrial Revolution started. 4.0 was the information society. That's where we are today. So 5.0 is basically a human centered society. And why is that important? It's really important because it addresses the population issues that we have today. Excuse me. Very, very people centric. For instance, the aging population of certain countries, for instance, so especially Japan. So 5.0 addresses the senior care type stuff, and that includes banking. You know, I mean, if you're talking about people that are in their 60s and 70s, those are the folks that are so used to going to a teller and to do banking stuff. So we have to address how they can get away from doing that and feel comfortable with it. Road traffic, children safety, obviously among some of the things that 5.0 does. And then in Singapore, for instance, the Smart Nation move uses 5.0, and you talk about efficient use in border control for ICA. You know, I mean, just think about it. Excuse me. It's very new. You walk into an airport and it's facial recognition, and that's going to happen in every single airport, in every single bank, in every single retail store. It's all going to be facial recognition, iris recognition. That's how you're going to get through things. Library automation and even self check-ins for hotels for safety reasons are all part of 5.0.
All right, thanks, Brian. And I think that's also a good context as I ask Dietmar and Vera what from their perspective, maybe the customer expectations, customer behaviors are changing. Maybe if you can share with us, what do modern customers expect from banks, and how is that changing? And maybe how you can also provide some context how these customer expectations are driving your transformation strategies. Maybe we'll start with you, Dietmar.
Yeah, thank you. And it's actually quite an interesting question because you've almost got these two worlds. And Brian, you've already alluded to that in your both the points that you actually made. You've got one part of the population that's obviously the younger generation that's grown up with technology, that's grown up digitally. They expect everything to be digital. And their view of the world is everything has to be instant, everything has to be available all the time, and it has to be personalized. So everything that they experience, whether or not it's their social media feeds, everything is personalized to them. Everything is instant, everything is real time. They want the immediate gratification. So, addressing that part of the population is important, but that's actually the easier part. So making sure that especially like us, that's a new digital bank. You build things up from the ground up. You don't have legacy systems. So building for that customer and consumer in mind, is almost the easy part in the digital transformation. So we've got all those digital channels that customers can transact. We even add the personalization in there. And obviously, being a bank, resilience is massively important. That's a big part of the trust component. You have to be available all the time. If a customer wants to swipe their card, they want to log in to pay with a QR code, or they want to transfer money, it has to be available 24/7. So that goes without saying. But then you've got this other customer, which actually at the moment still makes up the biggest part of the economy. And that is all about how do you get people up this digital curve? How do you get people up this adoption curve? And from our approach, I don't know if people in the Philippines might have heard this from the GoTime people, what we call the phygital model that we're taking to market, where we're combining having some kind of physical presence, having some kind of human touch, because we feel that's critically important for if you want to drive financial inclusion. Because a lot of the people that are currently excluded from the financial services market, or not fully served, or don't fully embrace it, they are not going to make that jump immediately into a fully digital world. They're not going to trust it. They're not comfortable. They don't trust themselves to do it. And they're engaging with a cold machine. How do they know what's happening at the back? So making sure that you add that human touch, you don't lose that human touch, and you do it in such a way that you can take people up this adoption curve. Because just expecting them to make that jump, yes, you will have a market. You'll have the new generation that's very used to the digital world. They will adopt your offerings, but you will not achieve your goal of financial inclusion and servicing the full market if you don't build, develop, and also have the processes and physical capabilities in place that you can demonstrate some of these processes. Brian, I think you've alluded to this. Even today, there's something like an ATM that's been in market for how long? You still get people that go to an ATM. They would ask a security guard, would want to go into the branch and ask somebody, just help me here. I'm not sure. I'm just too scared I make a mistake. So very similar with digital banking. People have to have that capability where people that are starting that journey, that they have that availability to them, that they get comfort with it, they get the trust in it, and that they also learn how to use technology. So we've very much focused on both those, and that's why we have things like the physical kiosk that's manned with an ambassador that can be there to assist the customer if they have questions, demo them how to use the banking app, or show them how to make a bank deposit. Obviously over time these things get adopted and it becomes full self-service. But on day one, you can't expect a customer, if you want to service the full market, to just build. So you really have to have both these customers in mind when you design not just your digital channels, but also how do you supplement that to actually get everybody into these channels in a seamless way that they're actually comfortable and trusted.
Yes, Dietmar, and I think one key takeaway there is while customer expectations shape how we offer our design our products and services, to a certain extent, we also influence the customers through education and basically onboarding them in this experience, so that at least we get to address these different personas and the segments of our target market and customers. How about you, Vera? What?
Yes, I think for the modern customer, the behavior they change a lot with the digital adoption. So basically, when they are looking for the service or product from the bank, many customers tend to be less patient in terms of the time that they need to wait to make any transaction. That is one example. Another example that we see the trend in the market, for example, in Thailand here, in the space of the investment product that the bank provide. In the past, I would say that for many banks, they can have their own subsidiary that can provide a specific investment product. Let's say the mutual fund with their own brand. So many customers they end up that need to go to many banks to get access to many mutual fund that what the customer need. But after 5 years ago, the trend changed a lot. Uh, we are now adopt the concepts of so-called the open architecture. That basically, when the customer visit one bank, they can get access to many brands of the mutual fund at a one-stop service with the more efficient transaction. And on the flip side, the advisor, the investment advisor or relationship manager for the bank can provide so-called integrated portfolio advisory that can combine the many brands of the many mutual fund across all the industry. This is one example that the technology help us a lot in terms of the provide and accommodate the need of the customer. In terms of the transformation strategy that we see and we try to adopt it into the bank. Basically, we start with the customer journey. We try to break down each step, starting from the customer have the first relationship with the bank, let's say account opening. We try to adopt the digital and digitize all those process. In the past, account opening for deposit account, for example, in Thailand, it may take like more than 30 minutes to complete all the transaction. Now I would say that we require less than 3 minutes to open the account for the customer with the help of all those digital, the facial recognition or the digital authentication. This is of all the example that the digital helps us a lot, and we adopt the digital in our transformation journey.
Thanks, Verawat. And one takeaway is while not everyone will jump immediately into pure digital channels, we still need to accommodate those who would want some physical interaction, but at the same time make it more, excuse me, more make it more seamless and less cumbersome on these customers, particularly in the case that you mentioned in terms of onboarding and among other things. And we are talking about customer behavior expectations, and in the first part, in terms of the predictions, we have noted that a large part of being able to anticipate and predict what the customers would need, or what are the services that we can and products that we can offer to the customer relies on data. I'd like to ask you, AJ, on this one. Um, Maybe you can elaborate further. How can institutions leverage data to particularly transform and innovate? And if you can cite some use cases and examples, that will be helpful.
Yeah, absolutely. So I think some of the thing I've noticed in the last 10 minutes is that kind of like a pointing towards sort of like a generational split, within the customers of the banking services. And what we have realized is that if you try to kind of like distill it down, so there is a current generation who like to have as much digital interaction as possible. They want to take their own decision, and they want all the kind of like a data points to be fed to them for taking the right decision. In fact, some point in time, they would expect a recommendation from the digital or the banking service provider. On the other side, there is still a generation who would like to actually talk to somebody on the phone, to a human on the other side of the line, or visit a branch, or get an advice on mutual funds, as Konbiravat said, and so on. Now, the foundational element to make sure that we are kind of like moving along both of these sides is the data. That's our experience. And one thing we are really good at is generating lots and lots of data, especially with the digital transformation that has taken place in last 2-3 years due to COVID. Now, from the data perspective, it has two parts. One is how do we collect and process the data to drive some sort of like insights, and that problem was seen as something that was easily solvable 5 years ago, simply because the data volume was low, and so on. That has become a big issue now for most of the banks. And banks, because of their regulated nature, they have to collect lots and lots of data from every interaction point. It needs to be secure. And again, the data tells a story. There's a lot of hidden gems in the data if you know how to process it well. And that's where platform, data intelligence platform comes in, because it can take in lots and lots of data, process it, come out with intelligence, and that can drive use cases which can be like customer facing use cases. We talked about depersonalization, what the customers see and feel when they interact with a financial institution. It could be things around, recommendations made to them. It could be things to do with payments, wallets. We are seeing new services like BNPL and so on. So the whole idea here is not only we provide an operational service, but also we kind of like bring the right service to the right type of customer based on their profile and past interactions and maybe cohort and so on. So that's one side of the use cases, which are the functional use cases. The other side, obviously, is that because we are relying so heavily on digital, it is our responsibility as a service provider to make sure that everything is running absolutely smoothly. So that's another angle of data, because just the data that kind of like gives us the details about the customer, uh, another aspect of that data also tells us whether services are running properly or not. Is there any friction in terms of the way the services are being delivered to the customers? Is there any signal that we can pick up that may actually compromise the customer safety or the safety of the data itself? So things around fraud detection, anti-money laundering, and so on. So net, I think we need to have that ability to collect data, process it, drive the insights, handle the operational use cases to make sure the digital services are running prim and proper, use the data to come up with deep personalization for the customer so they feel connected and they feel taken care of. And the whole idea here is that basically how we take the data and convert into a sort of like a revenue generating asset, instead of just letting it sit as a silo.
Yeah, to your point, AJ, for the longest time, data has been like a byproduct of transactions. But now, data, aside from the control aspect, managing data, considering confidentiality, security, as well as privacy concerns, you now see how do we now monetize and convert data into insights and assets. And that is also one of the interesting points on how things develop in this space moving forward. Thank you, AJ. Brian, you have given us also a peek in terms of some of the insight earlier, but I'd like to take this chance to ask you, Brian, particularly what are the essential technologies or solutions that you think will differentiate the bank of 2030 from the banks of today?
And how much time do I have?
Um, well, you have 3 minutes
Okay.
to
So,
answer this
so
question.
I mean, so one of the things I want to caution our customers and people that are viewing this right now is that technology is not a panacea to
Hmm.
everything. Okay,
Hmm.
it's combined with a bunch of other things like process and adoption. So you can have the greatest technology in the world, but if no one adopts it, then it doesn't mean anything, right?
Hmm.
So I there's so many different areas of how technology is driving financial services. All right. So I'm just going to touch on a couple. One is artificial intelligence. Okay. So we hear that a lot. I mean, these are the words we hear a lot. These are sound bites: artificial intelligence, cloud computing, SaaS, all that stuff. But what does it really mean? So we define banking, and banking is lending, and lending is credit scoring. And you get back to Ajay's point about using data. Artificial intelligence will be applied to a lot of the stuff that's currently script based. I mean,
Hmm.
and so you're going to see a lot of that. I think it was McKinsey who wrote a report saying that artificial intelligence will add $1 trillion of revenue annually to the banks. It's in 2030. So you'll see a big revolution in artificial intelligence. NEC is leading the way in that. They spend a lot of money on it, but there are some really great companies that are taking advantage of artificial intelligence, like FinBots, for instance, on the scoring side. Also, cloud computing. Again, I think McKinsey said $1 trillion in EBITDA will be added to the top 500 companies in the next couple of years or so, because cloud computing will allow them to get incredible efficiencies, right? Now, the adoption piece is what scares me because, as I stated earlier, I don't know of any major bank that has an enterprise-wide application on cloud. Um, so they use a lot for development, but I don't see anybody really taking that up. So if it gets taken up, then you can see that it'll add an incredible amount of cash into the system. The last thing is there's a revolution going on around application development, and I think the technology that's driving that is pretty cool. And why is that important? Well, it's important because banks have huge IT departments that spend millions and millions of dollars developing applications internally, and they do it serially, the old way. Now is the no code, low code trend, And I think it was Gartner. I hope I'm not quoting this incorrectly. That said, 70% of applications in financial institutions will be no code, low code by 2025.
Mhm.
And so companies like Appian, for instance, low code enablers of financial institutions are starting to see a real big uptake with the banks. And this will help drive a lot of behavior in the bank itself. It'll help banks be more efficient. The last thing I think that's very important is you got to put this everything into context. You think about it. Dietmar's hungry. He wants a burger. He goes online and he orders it, and 30 minutes later, he's got a hot, fresh hamburger in his hand. Why does it take a week for me to get a credit card? So the technology has to be applied in a pragmatic way to help us move in that direction. It says, if you can do one thing so simply, why can't you do it for other things as well?
All right, thanks, Brian. And I think the call is very clear that while we have these technologies, and it's not the silver bullet that you will bite and will solve everything. It really relies on, of course, you have people, the process, as well as the adoption and the change mindset. And while you might have a very advanced set of technology tools, but it's not adopted enterprise wide, and it's not something that is cascaded towards the different functions. And probably the benefits will be there, but as not as maximized or fully affecting or impacting the whole enterprise as well as the business and the stakeholders around it. Yeah, I think that's a something that we our audience can take on as they rethink also the technologies that they will be adopting moving forward. Before I proceed with the other questions, I'd like to remind our audience, if you have any questions or any comments, feel free to use the chat and Q&A function of our platform. We will have, um, depending on our discussion, we'll allocate time for some questions at the end of this panel before we close the session. All right. Um, I'll go back to you, AJ, and Brian was specific on the technologies on in terms of AI, cloud, and application development. And we know that Elastic is supporting enterprises and financial institutions in terms of their innovation and transformation. But maybe you can share with us how companies like you enable innovation in banks, especially with the pace of development as well as the adoption of these innovation in the companies that you work with.
Yeah, absolutely. So let me kind of like set a context before I go deeper into that. So one of the things that we have observed working with banks is that the banks themselves have gone through a huge transformation internally. A lot of banks, and I have friends who the respective departments in different banks. They kind of like tell me that the engineering has become again a front and center of the innovation that the bank brings to the market. Now, having said that, one of the things that we always focus on is that we kind of like work with banks in partnership to let the banks come up with new products and innovative services, while we kind of like enable some of that innovation through the technology that Elastic provides. And one of the really central piece that we do really well is we are able to drive insights out of data, a huge amount of data. um, we are able to basically collect data from different endpoints within banks, every single touch point, in fact, put that in context, correlate it. The platform makes use of some native AI and machine learning capabilities to find out anomalies, find out associations, find out what else is happening in a cohort, and kind of like present that into an actionable output. Now, that actionable output can be used to drive some of those functional use cases that I mentioned earlier, as well as it can be used to deliver operational excellence that a bank needs, both from the perspective of ensuring its services running in a fantastically well shape, there is no friction, and also to meet the regulatory compliance requirements. So the idea really is very simple here, that the Elastic platform enables data intelligence, and we work with the banks to come up with innovative products while we support that entire process, and also to ensure that the banks are running in the way they are supposed to be run.
All right, thanks, AJ. And there are a lot of things that we have already discussed, but like putting it all together from a bank's point of view, I'd like to ask you, Vera, what one of the key items of this session would be in terms of um, the item in terms of the future of money. So maybe I'll ask you, Vera, what how will the future of money transactions and the decline of cash impact banks in general? And in your case for Siam Commercial Bank, how do you take this on and address this?
Okay, so for the future, in terms of the cash, we see a lot of the reduction in terms of cash usage in the country a lot. Let me provide you some context. Around 5 years ago, Bank of Thailand cooperate with the older bank in Thailand. We implement the system. I would say it have infrastructure, so-called prompt pay. Prompt pay is infrastructure for payment which basically they allow the customer, the user to transfer their money via the mobile phone to the mobile number slash a national ID number. So with this implementation 5 years ago, we see a lot in terms of the adoption, in terms of the QR payment or digital transfer, and it reduced a lot of cash usage in the country. So the benefit that we got is a lot in terms of the cash operation. As you guys may know, bank need to spend a lot of money to handle the cash handling process, starting from cash at the branch to the cash at the ATM machine. So with the adoption of mobile payment, we see a lot of cash reduction which is it improved in terms of the efficiency and reduce a cost and also in terms of the government and also the Bank of Thailand, they will can trace in terms of that money for some kinds of illegal issue that many criminal they use in the past they use the cash as a method to transfer to carry the cash to do some illegal activity with the digital, with the mobile, with the digital transaction, we bring it to the onto the table, so all the transaction can be traced. And on the flip side, for the bank, we get a lot of data in terms of the transaction. It there are the micro payment. So basically, we think we understand the customer better with when we take a look at all the transaction that the customer made in all their journey in their lifetime start from wake up until they sleep. So with all this data, we can provide the service and also the timely product slash service to match with their need. For example, if you go to the airport, you will get some notification in terms of the insurance real time, push it into your mobile banking application because we know that you're gonna fly soon and insurance might be the product that fit with your need. This is the example that we benefit from all the transformation that we reduce in terms of cash and also adopt more digital for payment and transaction.
Thank you very much. And what I liked it in when you were discussing this item, while we haven't discussed it lengthily in the session, you have highlighted the importance of the coordination and collaboration within the banking community, as you mentioned, and particularly the regulators to foster that balance between pushing innovation, but at the same time having the safeguards or what you call the safety nets to balance these the potential risks as well as the challenges as we move forward with innovation with our customers, especially that we're dealing with when we're in banking, we're dealing with the trust that our customers have on us, and that is something that we really need to take care of. And actually that's a good segue to my question to you, Dietmar, particularly in terms of this balance. And you have entered the Philippine market and one of the six digital banks in the Philippines, and this is time or go time in the Philippines has been very strong in terms of in terms of helping in the financial inclusion strategy and initiatives of the government. But something that I also asked in one of the digital economy sessions that I have moderated in the past weeks. I'd like to understand, Dietmar, from your perspective, how can financial institutions balance innovation, financial inclusion, risk, and consumer protection? And it will be very helpful for our audience if you can share how time approaches this aspect.
Yeah, thank you. Yeah, very, very relevant question for us and who we are and what we stand for. There's a couple of pillars that we use to try and achieve this. The first one is we try and make banking less intimidating. So a lot of the banking products that are out there are very complex. The product structure, the pricing structures, and it's intimidating for consumers out there. So what we're trying to do is make the products we put into market as simple as possible for customers, that they know exactly what they can and can't do with the product, as well as how to do it. As well as on the pricing side of things, have full transparency on the pricing. Make sure that the pricing is real time. There's no surprises at month end when you get your bank statement. All of a sudden, there's a whole host of bank charges for transactions that you did in the beginning of the month that all of a sudden comes through as a surprise. So making sure that your pricing is transparent, it's simple, and it's real time. So no complex ad valorem charges, tiering, nothing that makes it hard for customers to understand what they're actually going to pay. So that's one thing that we feel is very important. And then the other one, which is also related to transparency, is making it very clear and transparent for customers what data are you gathering and what are you planning to do with that data, and giving them the option to opt out of some of those actions. So a lot of the customers and a lot of big part of the population, they want personalized service, they want recommendations, but there are also certain customers that don't want that at all. So giving customers that option, that they know what you use their data for, and that they have the option to opt out of that if that's not something that they want to have their data be used for. So once again, providing transparency on what you do with the data and what that data is, and giving them the option to opt out. And then the other one that's related to sort of innovation and inclusion, and I've touched that on my sort of first point as well, is to make sure that you don't innovate at the expense of a large part of the population. So to do financial inclusion, and if you want to do it responsibly, especially in countries like Southeast Asia, where you want to have broad reach, cost wise, it's not efficient and effective, and especially with the disruption that the digital banks will bring, to have a branch infrastructure every place. It's logistically and just too difficult, and also too expensive. So the digital banks bring a huge opportunity into the Philippines, Indonesia, a lot of these markets that are very, very broad coverage, that's logistically hard to service, and expensive to service if you want to have that physical branch infrastructure. So thinking about your innovation and your technology through that lens as well, is how do you use that to service the broader part of the population. And then the fourth point, which I think where the digital banks really have a competitive edge about a lot of the incumbents, is on the servicing side of things. And I don't think we've touched on that yet today. Is when you think of a lot of the banks across the world, not just in Asia, transacting, every bank has some kind of app or internet banking experience that you can transact. But the reality is, as soon as things don't work or go the way you expected, that's where the wheels come off. And now you have to go to a branch, and you spend hours in a branch. The systems are slow, and different people have to log in and override, and it takes you hours to get an answer, because they're not built for that instant service. They're not built for that remote service. They're not built for self-service. The systems aren't designed like that. So as we always say, putting these front ends there that you can onboard digitally, you can transact digitally, you're putting lipstick on a pig. It doesn't change the back end. It doesn't change what's actually running in the background. So making sure that you also set your organization up, that you can put service front and center of your offering, that if customers do either have just a question on how to do something, or they actually have a concern. Money is a very personal thing, and if you transfer money and it didn't reach the destination immediately, it's a real concern for people. So making sure you can answer that in a very seamless and effective way for the customer is very, very important, and still having the ability to have that human touch to do that, but without customers having to drive to a branch or sit hours in the queue to do that. So yeah, those are probably the four main things I would say to balance that risk between innovation and also just the reputational risk, providing transparency and the likes.
All right. All right, thank you. Thank you so much, Dietmar. And we still have a lot of discussion for this session, but I'd like to check first our chat and Q&A for any question that our audience have posted. And I would like to invite our audience, if you have any questions, feel free to post it in our Q&A or chat so we can um, read them out and ask our panelists. Dear panelists, I will just read some of the items posted in Q&A, and feel free to react or provide the comments on these items. So one would be I agree that we expect too much on AI. Digitalization, clouds, especially due to regulatory restrictions and legacy system in conventional banks. I think this is related to the first part when we are looking at the predictions for the banks of 2030. Dear panelists, any comments or feedback on this? Actually, it's not a question, but it's more of a comment from our audience.
Yeah, this is Brian. So I think that Andy's, his comments correct. We do expect, our probably expectation levels higher than what's being delivered. I don't know if anybody in this panel is satisfied with their internet banking app, where the bot comes up and you ask them questions and they say, "Can you restate that somehow?" Um, and the other things I think that we haven't touched on, especially, is around the onboarding process, the electronic know your customer process. The market rate right now still, Alvin, is 80% abandonment. And
Mm,
this for Dietmar's company, this is a must be a real big problem, because banks want to depend on that technology to drive down cost and stop human intervention, right? And still they haven't figured it out to get it below 80%. So Andy's statement's spot on.
mhm. Yeah, I think particularly in terms of two things, right? Regulatory restrictions and the legacy system in conventional banks. Of course, the legacy systems, especially they're not designed for cloud and for this type of operating model and environment. So, especially with years of building on that, for example, core banking. That makes it a little difficult. Actually, it's very challenging to decouple your legacy systems and the move to more agile or more flexible systems that will allow for a new business model or more digital focused business model. And at the same time, from a regulatory restriction standpoint, I believe this varied in certain different degrees across jurisdictions. Some jurisdictions would allow full migration to the cloud. Some would allow selective, depending on the type of system to be migrated to the cloud, and the cloud model implemented, whether it's a public, private, or hybrid. So yes, this is something that is a good consideration.
One of
Let
the, I'm sorry. Yeah,
Yes, Brian, go ahead.
one of the facts that probably people don't know, because they're not involved with this, but I know of at least 12 very large banks in Southeast Asia that are running 25-year-old legacy systems on 25-year-old infrastructure. So,
Mhm.
and Andy's correct. Legacy system in conventional banks has to go.
All right. So
Yeah.
while yes, sorry,
So
yes,
sorry,
AJ.
Alvin. So just yeah, I would just like to kind of like stack onto that. So one of the things that we have noticed is that yes, there is kind of like too much expectation from AI, and the way we have seen successful leverage of AI is really in the scenarios where it is used not as a displacement of an existing capability, but more of an augmentation. And the reason for that is simply because a lot of the use cases that we kind of like come across, they drive their intelligence out of processing a huge amount of data, which is actually not humanly possible to go through and find the pieces and the nuggets of intelligence and information. So as long as it is used as an augmentation, either it's a customer facing use case or an internal operational use case, that's where we have seen a lot more success. And I would say on the point of the cloud, again, cloud is, I would say, it's not a mandate. Obviously, there's been a lot of modernization projects run everywhere, and there are clear advantages of cloud. However, I think it's a responsibility of all of us to ensure that we don't pivot into just one direction as the only choice. And technology providers, especially, they have this added responsibility in terms of like whatever technology we bring to the market, kind of like also addresses the regulatory constraints. It should be able to be deployed on clouds. It should be able to be deployed and run in on-prem environment, maybe in a mixed environment, and so on. So step by step, yeah, we can make that change slowly. But at this moment, especially in the banks, which is a heavily regulated industry, we need to ensure that there is a clear path going forward.
All right, thanks, AJ. And I think that dovetails to our one of the items in our Q&A. So, and FYI, Singapore and Malaysia, in order to do digital bank, you need a license. So generally not an option for commercial bank to transform. I think my perspective on this would be, of course, there will be specific licenses, digital bank or virtual bank licenses in jurisdictions that allow these institutions to, of course, present themselves as digital bank. But I think there is also that option for incumbents, as we call it, to digitally transform their operations and products and services without being a digital bank license, but it's more of how we offer our products and services, how we manage customer experience, and how we do things within the organization. I think I can we can take one more item uh, from the Q&A. Um, Feel free to comment, dear panelists. So I read the McKinsey report that Mr. Brian mentioned. Um, However, I would like to know how to know to transform. How big is the digital risk versus the benefit that it could bring us? And I remember McKinsey didn't justify how transforming in digital bank could bring 1 trillion. Maybe some thoughts, dear panelists, on this. So one point would be in terms of the di- the balance between digital risk and the benefit of transforming or becoming like a digitally enabled bank.
Well, since he mentions my name, I guess I'll take a stab at this. And
Sure, Brian.
he's absolutely correct. I mean, this is pretty much what consultants do. They kind of throw this stuff out to get you thinking. But if you take a look at, and I think Dietmar probably knows a lot more about this than I do. But if you take a look at this, the risk versus the benefit is that you have to it's kind of like a protect and grow type approach to financial services. You can't let go of something that's providing keeping the lights on, and embrace something else that's a calculated risk. So if you take a look at all the digital banks that are currently operating today, I'm not so sure how many of them are actually making money. And I'm sure that at some point in time they will be making money, the ones that are not. But the legacy banks, all the retail and commercial legacy banks, are what feed and provide lending. Like I told you before, banking is lending. They actually are feeding the corporate banking systems, the treasury and the wholesale banking. That's where all the money is coming from. So that is a big risk. But eventually, that it's gonna have to transform from its current state to that future state. And how long that's going to take, I'm not sure. But that's the risk that banks are taking today, around dipping their toes into the digital banking pool and seeing what the temperature looks like. That would be my take on it, Alvin.
Thanks, Brian.
Maybe if I can maybe just add one or two
Sure.
things. Obviously, look at it through the lens of the digital banks. I've spent 15 years at traditional banks before I entered the world of digital banking, but just a lot of the benefits that we see as an organization is just our ability to scale and our ability to launch into new markets by being a digital player. It's just something that you cannot replicate if you're not a digital player. Being a digital player, you can get full market coverage very, very quickly within a country that you're in. And being fully run on the cloud, your ability to scale and grow with your customer from the day that you have one customer versus we've got over 6 million customers, or just this week we'll have 6 million customers in South Africa. And if we had to pre-buy and stay ahead of that curve with physical infrastructure, that's almost impossible to do these days. So hyper growth is this enables you to sustain and manage the hyper growth. But also from our first operation that we launched in 2019 in South Africa, it took us 3 years to build the first bank that we launched in South Africa, because people have alluded to it. It's highly regulated. Every market has their local payment system, so it's a very complex sort of market that you need to navigate, both with some localization plus obviously the fact that it's so highly regulated. But when we now went to the Philippines with GoTime, it took us only 13 months from the first day that we brought the first person on till we switched the bank on in the Philippines. So just being able to, I wouldn't say lift and shift, but there's a lot of reuse that you can use. Obviously, still quite a lot of customization and localization that has to happen, but it gives you massive scalability, not just within a country, but also the ability to go into other geographies if you're already in the cloud and just availing a lot of what you've already done in a new jurisdiction, in a new market, and just adding the necessary customization that you need for country number 2 or 3.
All right. Thank you, Dietmar. And in the interest of time, I see that we have a few minutes left. I'd like to ask one final question to our panelists, and this also serves as basically our conclusion and our call to action for our audience and those who will view this discussion. Probably let's start with you, Brian. My question is, and this goes for everyone. So, how can banks particularly prepare and transform themselves to be not only relevant but also be a leading player in 2030?
Well, that's the question I think that all these banks are really struggling with. Okay,
Mhm.
in order to pursue a new path, you have to kind of let go of the old one,
Mhm.
and I think that transformation depends on a lot of things, but there's just one thing really. Honestly, it's money, it's profit. That's what drives all the behavior. So if there's a leader in a financial institution that can champion a transformation that shows that they can, for instance, go paperless and increase efficiency and decrease expense by going paperless, or driving the 12% increase in millionaires every single year. Okay, 12% more millionaires every single year. And how are they addressing the transformation of retail banking into mass affluency? So I see that as being, the things that they have to prepare is they have to do a lot of homework to make sure that they create this future state that's so compelling that people in the current state really want to move there. They feel uncomfortable with the current state of affairs and they really want to move there. And I think that's what's missing today. And I think that's what's going to have to happen, really.
All right, thanks, Brian. I think the push for letting go of the past or letting go of what you currently have to be able to seek the change that you want, and I think inspiring and motivating people and the organization to go to the future, as you mentioned. Thanks, Brian. AJ.
Yeah, I would kind of like to say that, as Brian mentioned, that the digitization is happening. We just need to make sure that we actually meet the customer's expectation. in the coming years. And that is exactly what is going to drive the profitability that will make some companies successful, some maybe lag behind. And at the same time, to enable that, we did talk about how the application world is transforming as well, and internally how the data can be leveraged to drive meaningful insights, to bring new products and services to the market, to ensure that the banks are delivering absolutely frictionless experience, and in that process keeping everything safe and sound. So that's how we see, it's going to be one of the key enablers from Elastic's vantage point. And just as my closing statement, I would say that don't let the data be a byproduct. Don't keep it locked. Set the data free, and your mind will follow.
Thanks, AJ. Set the data free, and don't let it be a
Absolutely.
byproduct. That is a very, very good closing statement there. Thanks, AJ. How about you, Vera? What?
Yes, for me, I think for the bank to be prepared for the transformation, I think first of all they need to put the customer at the centrics at the centers of this transformation. Try to understand the customer pain point, try to come up with the solution to match or help all those customers to address their problem with digital. And for the bank themselves, or when you try to push for the transformation, many times you got struck with many stakeholders that you need to manage. I would say that for the bank, you need to aim high, but you can start small. You can try to learn, try to fail. Failure is I think is an important part for the learning process. But you need to fail cheap and fail fast. With fail cheap and fail fast, you can pivot around all those things and come up with a better alternative, better solution. Because you cannot make the great thing at one time when you start the new journey. Many times you're gonna get stuck and you need to come up with a new way, pivot all those things. But at the end, with your aspiration, with your commitment to deliver the great product and service for customer, I do believe that any banks or any team that push for the digital transformation can succeed at the end.
Thanks, Verawat. And aim high, start small, and fail fast. Especially for large financial institutions, it might be daunting how to do digital transformation enterprise wide with a lot of complexities. But I think that you have a good point in terms of using start small. So it's more of having a use case or a point, proof of concept, just to keep things start things off. And once you get the success of that, then that will be easier to replicate across the enterprise. Thanks, Verawat. And last but definitely not the least, Dietmar.
Thank you. So what I would add is just make sure you understand the customer, you understand what their needs are and what they want, and that you deliver to them in an intuitive way, so that you just drive adoption. And if you do go on a digital transformation journey or you make any changes, make sure that you also plan for how do you take people up that adoption curve, that you can migrate them off the old process and system. Because if you have to run things in parallel, I don't know, keep all your branches open or keep your paper-based processes going for 10% of the people that you've not migrated over, cost-wise, you just won't be able to competitive. You won't be able to compete, and there's just too much innovation happening out there, and you have to remain relevant. But you have to take the customer with you on that journey. Otherwise, you're going to make yourself irrelevant as well.
All right, thanks, Itmar. So, take the customer in the journey with you. I think that's a good closing statement, because at the end of the day, it's our customers that keep us alive, right, and make us relevant. Again, Dietmar, Brian, AJ, Verawat, thank you so much for being generous in terms of your time, your insights, and your predictions. We've learned a lot. I personally have learned a lot, and this is very enlightening. And as I say, this is an emerging, an evolving topic, and this is just a start of so many conversations that we will have on this topic. And I would like to thank also, get this opportunity to thank for having me as a moderator. And I do hope that the conversations will continue. And if, of course, to our audience, thank you so much for your questions, your comments, and feedback. And of course, you are free to interact with us through this platform, and you can also find all of us in LinkedIn. So if you want to connect, ask questions, or just continue the conversation, we'll be happy to do so. And with that, thank you so much, everyone. Turn it over to you, Jed.
All right. Thank you, Alvin. Thank you from the rest of our panelists for that great discussion. As Alvin said, if you have any questions for them, you can reach out to them directly through this platform over at the People tab. But specifically for Brian and AJ, you can reach out to them and their team over at their respective booths at the booth section. Thanks again, everyone. All right, up next, we have a presentation. We have a presentation by AJ Kushwaha, a director, solutions architecture at Elastic, on how a data intelligence platform solves your critical use cases in customer experience. Over to you, AJ.
Thank you, Jed. And I'm going to just share my screen. And if somebody can give me a cue, Jed, that you can see my screen, then I'll get started. Okay, great. Thank you. So good morning, everyone, again. And we talked quite interesting topics in the previous panel discussion. I kind of like wanted to give you a little bit more details around Elastic. The key theme that I touched upon in the previous session was the data intelligence. And I would like to introduce Elastic as a data intelligence platform for financial services, give you a flavor of what we do, how pervasive we are, what are the different use cases for the financial industry, and then probably take some questions from you as well. Please type them into the chat, or after the session, we can take the questions or drop by our digital virtual booth, and then we can have a conversation there as well. So yeah, my name is again Ajay Kushwaha, and I'm from Elastic. I'm based in ASEAN, Singapore. I take care of the solutions architecture function within the company. And let's talk about Elastic. So first thing, I would like to actually introduce Elastic. Now, the thing is that I've noticed that a lot of you may not be actually familiar with the Elastic brand, but I'm extremely certain that, in one way or the other, Elastic might have touched your life in last 24 hours. And what you see on this chart is really the kind of clients, the very innovative companies who make use of Elastic capabilities to bring their products and services to you. And they range all the way from apps like Spotify, automobile companies like Audi and Volkswagen, lots and lots of telcos, including the local ASEAN telcos, which are not mentioned on this chart. The banks of both natures, the traditional banks, the digital banks, lots and lots of fintech companies, ride-hailing, food delivery. You may use apps at work, like Adobe apps, Workday, SAP Concur, and so on. You may book your tickets for holidays on booking.com. You may do some investments using one of the trading platforms and so on. So you can see that Elastic has been powering lots and lots of these apps and plenty others that touch all of us. And just that we are a technology which is kind of like focused on enabling some of these innovations, and hence the reason that you may not actually have directly seen Elastic logo when you have dealt with any of these services. So with that as a context, I would like to kind of like talk about why we are so obsessed with driving data, intelligence out of the data. And this is kind of like is a prediction done by IDC, which talks about that by 2025, we would be generating about 480 exabytes of data every day. We, as in like the collectively the digital world, and that includes the consumer side and so on. It's lots and lots of data, and even if you distill it down to your specific use case, you will realize that your companies might be collecting lots and lots of data from the touch points with their customers, lots and lots of backend systems, apps, other endpoints, and so on. The key thing here is that the data is kind of like being generated fast and furious, And oftentimes it is looked into only when we want to go back and try to find something that might have happened. But we are not proactively driving the intelligence out of the data that is already being generated. And this is where Elastic is extremely good at. I would like to kind of like talk about the kind of financial institutes that we work with. So of course we cover banks of the traditional nature, the neo banks, born in the cloud digital types, lots and lots of fintech platforms that provide services to the consumers directly in the form of investments, in the form of trading, etc. The digital insurance world has been transforming leaps and bounds lately. We are extremely prevalent there in the capital market, institutional banking, and so on. So pretty much every aspect of the financial industry we have touched, we have presence, and I'll give you some of the examples in this presentation as we go along. Now, there are three things that we really focus on and we are extremely good at. One is discovering insights out of the data that you generate and collect. And that's a very important thing because that's really a foundational technical use case that drives everything else that is built upon the Elastic platform, be it the functional use cases, be it the operational use cases, and so on. Second thing that we do natively is we make sure that when you focus on delivering a customer experience, it is delivered in an extremely frictionless manner. And that is done by ensuring that every single touch point that is involved in the entire ecosystem has been performing to the levels that it is designed for. And finally, because we are talking about data, we are talking about digital services, it is absolutely important that we keep everybody and everything safe. And we meet the regulatory compliance, or rather we help you meet the regulatory compliance of your respective countries. So those three are kind of like the technical foundational capabilities. But let me elaborate these and kind of like put a little bit more color to it in terms of how they turn into the specific use cases that we talked about in the previous session, or we will discuss as we go along. So first thing, as I mentioned, Elastic Platform that is extremely good at is finding intelligence from the data that you already collect. And there are two aspects to it. One is obviously bringing the data from different sources into the platform and processing it. And there's a lot involved in that entire life cycle. However, what is important is that Elastic actually has the capability to pretty much ingest data from every single endpoint that you can think of and process it. There are capabilities which are built in natively that make use of the AI and machine learning. That is actually the engine that helps us to drive the insights out of the data that you have been collecting. We do heavy correlation, we do associations, and so on. So what it means for the financial industry and for the digital banks. So a couple of examples. So for instance, it has been a challenge for a long time actually in the industry, especially more so for the digital banks. How do we build and stitch together a true customer 360? And the sticky bit here has been that the data gets generated from different sources, all the way from the digital app that you might have. If you still has presence in the traditional world, every other touch point, the call centers, the branches, the kiosk, ATMs, maybe partner apps that you work with. So the data gets generated from so many different endpoints, and it ends up in different, so-called the backend kind of like data stores. It has been extremely difficult challenge to stitch everything together and generate a true customer 360, so that not only you can understand who is every single customer, but also you can figure out what is their behavior to drive the right personalization, to be able to predict what this specific customer individually or as a cohort might need, so that you can fulfill that need and basically be relevant to your customer. So Elastic does that extremely well. While doing that, obviously, lots and lots of data is feeding into the system, and you can do a lot of analysis on the data. What we have been seeing there is that there are use cases that are emerging, and some banks have actually done that, which is about looking back, providing an infinite look back to their customers of every single transaction that has occurred. But it's not only just about providing the visibility of the transactions, but also be able to analyze and figure out persona of a customer beyond what they are telling you. So by analyzing the data, and I gave a very simple example, like if you have just the credit card spend data, you would be able to figure out pretty much lots and lots of things about the lifestyle of a customer, hence be able to innovate with the right products and services and bring it to them. So these are some things that are the capabilities within the Elastic foundational platform. And in addition to that, because there are different personas involved bringing these services and products to the market, to the customers, it allows natively out of the box a deep discovery of the data that is already in the platform. So every single persona, whether it's a customer service staff, whether it's a relationship manager, or if you are a pure digital native bank, the ability to basically pull out the intelligence from the data and infuse that with the way the personalization works at the digital front end. All these things can be provided and serviced by the platform. There is obviously a human interface to the platform, and it's heavily surrounded by the APIs. So pretty much it is able to integrate with any app that you already might have, any other system that you already might have. And that is the first capability of what Elastic does. Now, the second thing that we really focus on is we focus on making sure that whatever services you as a bank is bringing to the customer is absolutely frictionless. And the friction can come from different scenarios. So it could be simply that somebody is trying to do a wallet payment, or trying to check a past transaction, or doing online fund transfer, or trying to purchase a coupon, and they're just experiencing some sort of like slowness. Obviously, when we deliver these services, or any of the engineering teams that deliver the services, they test everything, and they want to bring the absolutely high quality service to the market. But oftentimes, there are a combination of things that can actually cause a deterioration somewhere. And it is extremely hard actually to very quickly pick out, analyze top to bottom where that friction might be coming from, and rectify it. And Elastic is able to help with that. Because it is able to collect data from different endpoints directly from the sources, or even from your logs, and be able to stitch everything together, put a layer of machine learning on top of it, figure out what is normal and what is not normal. Anomaly detection is a big capability of the platform, and hence it is able to tell anybody who is involved in ensuring that the banking services are delivered absolutely frictionless, to tell them exactly where the issue might be, what do they need to focus on, in a very, very time critical manner. Because with the digitization, every service is out there in the open. Every single minute causes a customer satisfaction issue. And in many cases, actually, every single minute of friction causes a revenue impact. So it is very, very important that there are systems and mechanisms in place to make sure that we are able to not only pull out these situations, rectify them, but also in some cases anticipate. So one of the things that the platform is able to do is, based on the past behavior or the patterns of the data, we are able to kind of like in a way predict what are the causes, what are the variables that may actually cause a deterioration, for example. So that is one of the things that we focus on very deeply from research perspective as well. As I said, that the platform is able to, because it is able to correlate data from every single endpoint, it is able to analyze pretty much top to bottom in a full stack manner, what might be happening. And that also includes, if you are a distributed business, what is happening at your different touch points. So be it your B2B APIs, be it your, if you're still operating ATMs and branches, what is happening there, and so on. I basically bring everything into a single pane of glass. So that's the second capability Elastic does. The third thing that we very deeply focus on is making sure, given that banking is a heavily regulated industry, everybody and every single data point that you have is safe and secure. Every system is secure. There is absolutely no compromise. There is no risk in terms of hacking or any sort of like an insider behavior that might put you as a company or your customers at risk. Obviously, there are two aspects to it. One is being able to pick out the signals that might indicate a bad behavior by an actor, both internally and externally. And second thing is being able to fix that. So with the Elastic platform, not only we process the data, but also we have kind of like extended to ensure that we go all the way to the endpoints. There are agents available which are not only able to pull the data and bring it to the platform, but also be able to react based on what might be happening from the security perspective. So we do that as well. And again, because it's a data intelligence platform, we are also able to pull out and pick signals that might indicate fraud, that might indicate money laundering, and basically surface them to a risk analyst in such a manner that, if something has happened which is not normal, they are given a warning. In the situations, if they have picked up a behavior that they want to investigate, the platform is able to basically pull data intelligence from different sources and give the full picture based on the timeline, based on the user, based on every touch point that might have been involved, so that a risk analyst or a security analyst can go and figure out what has happened, what is the impact, and then try to figure out how to fix that. So that's the third key capability that we have in the platform. And would like to just give you a very quick life cycle in terms of how Elastic works. So obviously we pick the data, we analyze it extremely well, and then we generate the insights out of it. And Elastic platform is available both in the on-prem world, because again, a lot of regulated industries, they do need to have the data residency requirements fulfilled. They need to ensure that the data has fully in control of the company. Or if you wish to do so, it is available on different clouds, all the 3-4 major providers as well. And yeah, and finally, if there is one thing I would like you to remember from this session is that when we talk about data intelligence, there are a couple of capabilities that we need to have. One is obviously to pull and process huge amount of data and make sure that we generate insights that are actually helpful to humans. Not just generate visualization, but actually generate insights that is helpful to humans. And that's what Elastic does. So the use cases that I mentioned, both functional and operational, plus the ability to generate insights, and then lots and lots of capabilities built into the platform that we can discuss if you drop by our booth. That is what Elastic is extremely efficient at. And we have been working with lots and lots of big players who have been bringing huge amount of innovative use cases into the market that you can see on this chart. And with that, I would like to end this presentation, given that we are running out of time almost. And thank you very much. Jed, back to you. And if there are any questions, we can talk those if we have time.
Perfect. So thank you, AJ, for that insightful presentation. So as AJ said, if you have any questions for him, Elastic, or if his presentation captures your interest, you may catch him and the rest of his colleagues over at the Elastic booth, and they will be more than happy to assist you. Thanks again, AJ.
Thank you.
All right, so that is a wrap for our Asia Leaders Talk, the first track of our virtual conference. See everyone on the next track.